Success is nothing more than a few simple disciplines practiced every day. Jim Rohn. Each and every day, my friends, 10 to 15 minutes. That is all we ask. Let's jump into these charts. We see everything down for the day. Big down day for stocks and Bitcoin. We see that gold is down some. Bonds are the only thing that is up. Now, let's jump into these charts. I'll give you the quick recap, and don't forget our trade execution summary is always in the email we send out every day at chartingwealth.com. If you're not signed up for it, go to Charting Wealth. Sign up for our daily reviews. That's the Market Pulse Daily, and then our once-a-week Market Compass summary for the week. You get that 5 emails if the market's open 5 days. If it's a slow week and there's a holiday, then just 4. And again, we never spam, never sell that list. Go sign up for free, top of the page at chartingwealth.com. The trade execution summary grid that we have here for today shows that we are short on everything. Now, you know, those of you who are listening on Friday, you are well aware that we told you about how we were short on the S&P 500, the NASDAQ 100, and Bitcoin. And indeed, that is exactly what those things did today. We were long, 70% long, with a 75 to 80% backtest accuracy on bonds. Bonds were up over 1% today. So let's talk about where we are, where things are going. Look at the big down candle on the weekly chart for the week. First day of the latest 2-day candle, you can see ramping up, heading down. We're almost at average volume already, unless it is a crazy down day tomorrow. I don't know how we're going to get all the way up to where the week ended last week with that crazy volume, just super, super high for the Thursday. Friday, as we look at what happened in the morning here, you can see average volume in the morning, much higher above average volume in the afternoon as the S&P just crashed down hard, 2.66%. We are currently 64% probability for continued short position. Our support is at 555.59. Resistance is at 580. Like I said, you don't have to write these numbers down. If you're a subscriber, you'll get the grid. It'll be there in your show notes. The aggressive entry point is right there at 561. The strict entry point around 560.58, which is where things closed today. Of course, you always want to have your moves backed up by volume. You want to have them, again, following all the rules that we use on a daily basis. You want to see the market, the candlesticks, the trend lines, everything moving in your directions. We expect about another $20+ down move. Accuracy, back test accuracy on the aggressive, 60%, on the strict, 70%. So again, we'll continue to keep an eye on things and see if these markets continue to plunge. Let's look at the Qs, down even more, 3.88%, a hard hammer down. You can see already at average volume, just the first day of the latest 2-day candle. See where things really fell off the deep end in the afternoon. We are 60% in continued down move. On Friday, we were at 60 and 65, the same. It's remained the same. We've got support around the 468 mark. We have resistance around the 497 mark. Aggressive entry point is around that 473 mark. Strict entry points around the 468 mark. And again, a move of over $30 projected. Now again, the backtest accuracy not anywhere near as strong as the S&P 500. It's at 55% for the aggressive, 65% for the strict. Of course, we love when things are up around the 75, 80 degree mark or 80% mark. That's always much, much better. Of course it is. And again, we like things that are, again, very positive in our favor with our back testing and our probability. Let's move on to bonds. Bonds were, again, on Friday, we were long on bonds at 70%. That has paid off today as we look at an up move of 1.04%. Now, bonds are, again, hitting at some levels where we are seeing some resistance. We see resistance at the 91.63 mark. We're at 91.05 right now. And we're going from that long position to, again, about a 55% short probability. And again, that's not backed up by much in the way of the accuracy test on the back. At the aggressive, it's 50%. At the strict, it's 60%. And again, might see a pullback. We see support at 90.90. It's currently at 91.05, as I said. And like I said, resistance at the 91.63 mark. So keep your eye on things if you're long on bonds. I mean, you can see where things went up after several days of down movement and then started popping around on Friday morning, then pulled back a little bit. It looks like on Friday afternoon on the Heiken Ashi, and then popped up nice and strong in the morning on Monday. Not quite as high in the afternoon. So again, keep your eye on things. We don't have a higher high yet this week. You can see where the volume is. Got one more day, but you can see where it's fallen off, and there is downward pressure there. And that's what our charts are showing us. So do be careful if you're staying long on bonds and haven't already taken some profits. Now, let's move from bonds on to gold. Gold, we were long on gold on Friday. Gold did pull back 0.88%. We're at 50-50 here as we see where the markets went as they've been sliding sideways on that 2-day chart and on the half-day. I'm waiting for some real confirmation as to which way gold is going to go. Is it going to go up? Is it going to go down as stocks pull back? You know what happens? We've talked about this a lot. People have short positions to cover. They start selling things like gold. That's why you can see these systemic, system-wide pullbacks when markets really get hammered down. People are selling things, no matter what they are, to cover short positions, margin calls, those kinds of things. That can, of course, drag the whole market down by throwing lots of things into the market. You get more supply than the market desires. Price does what? Goes down. So again, we'll keep a close eye on gold and see how much this market pullback affects the price of gold. Right now, support we see is at the 265.64 mark. Resistance is at the 568 mark. The aggressive entry position is at 266, 265 on the strict. And again, we've only got a back test accuracy of about 45 to 55%. So not holding our breath on that. Let's see what gold does. Now, as we move from gold into, lastly, Bitcoin. And of course, on Friday, we were short Bitcoin. That's what our probability was. Not a great probability of shortness on it. It was 55%. The backtest accuracy was 60 to 65% between aggressive and strict. And of course, Bitcoin did pull back today big time, 8.94, almost 90%. Just jamming down in the morning and the afternoon. But you look at the volume, not even average volume on the half day. Not even close to average, half of the average volume on the first day of the latest 2-day candle, and low volume on the weekly, but a lot of down movement. So keep your eye on things. We'll see how Bitcoin continues to move throughout the course of this next week. We love to hear from you guys. Don't hesitate to reach out to us, cw@chartingwealth.com. God bless. All the best from the whole team at Charting Wealth.